The Dow is up 20% since President Trump's election, which was just 183 days ago. That marks the fastest 20% jump after a new president's election since President George H.W. Bush nearly 20 years ago. Let's bring in today's market panel. Robert Wolf is CEO of 32 Advisors and a former economic advisor to President Obama. He's also a Fox News contributor. Heather Zumarraga from SunAmerica Funds joins us, and New York Stock Exchange trader Keith Bliss. Keith, I'll start with you.
Okay.
So what do you think? Do we go higher from here? Do we take a little break? What's your bet? What does it feel like?
Well, I don't think we're going to run off to the races, but I do think we go higher. If you take a look at, so what I take a look at a lot is both quantitative work and technical work. And what the charts tell me about the broader market, and then when you get down into the sectors and the subsectors, is that this market is still very well positioned to move higher without a lot of overhead resistance in front of it. We're in new territory, it seems like, every day, and therefore you don't have a lot of overhead resistance. All the major averages are trading above their 50, 100, 200-day moving average and well above intermediate and short-term trend lines that were marked back 2, 3 years ago and 6 months ago. So I'm actually very encouraged. Listen, as long as the earnings picture can continue to hold up, as long as the craziness around the world doesn't get too crazy, I think money will continue to flow into U.S. equities and push this market higher.
Yeah. Heather, no matter who it is that I talk to, whether it's CEOs or it's people with money in the market or people in funds, they talk about the fact that regulations have been pulled back, but they also think that they're going to see that tax reform will take effect in 2017, and that's what's behind a lot of the positivity, the momentum in the market, but also the economic growth. What do you think? Do you agree with that, or is there more at work, less at work?
It sure is, Melissa. Tax reform, or the promise of tax reform, has a lot to do with why the markets are going up, but you can't ignore the fundamentals here. Whether or not that happens, I think that was a big factor in November, December during President Trump's, during the election, and then when he was inaugurated in January. But now the markets are running up on fundamentals. 12.5% earnings growth, GDP, as President Trump referenced today, at 2.6% and rising. Those are all positives for the market to continue higher from 22,000 today.
Robert, your take.
Well, you can't beat these earnings. 75% of the companies have outperformed. We stay in this low-rate environment, low inflation environment, so it feels good. I would tell you I'm pleasantly surprised. I would have thought without a big legislative win it would have been much more volatile, but you were talking about the VIX earlier on, and there's a lack of volatility in the market, and I think all eyes will be on what the Fed does, and I think they'll continue to go at a very slow pace of raising rates.
Yeah, Keith, what do you see as those factors ahead that could derail this or keep it going? Is it about the Fed? Is it about legislation? What do you think?
Well, I think in the short term, I really don't see anything that's going to stop it, especially when you take a look at the participation that we have here in the market and what we will likely see for the remainder of August. When you have a lack of participation and you have momentum and sentiment working the way it is, it will continue to grind higher. I think longer term, though, there are some headwinds that we need to be worried about. We still need to be worried about economic growth and the finer points underneath that economic growth. How long can we keep pushing this market higher with productivity down at the levels it is? If we do get legislative stalling, maybe because people don't agree with the plans around taxation, or maybe they just want to derail President Trump's plans, that's a risk that we have there. And then some of the internals that we're taking a look at. We do need to have a larger participation across a broader plane of stocks to keep pushing these markets higher. Keep an eye on the Russell 2000. That will be key as we get through the summer and into September. If that can catch back up with the bigger indexes, then we'll be in good shape.